shares of this or 50,000 shares of it, which wouldn't be an insignificant position, but let's just say all of a sudden this thing is ripping up 22, 23, 24, 25, 26, 27, 28, 29. And what you know is happening is as you're trying to cover the position, the market makers are seeing your orders coming in and they're pulling their orders out of the way. Because a market maker doesn't want to go short 50,000 shares of this thing. So if it sees your big buy order coming in, then all of a sudden they're going to cancel their sell order. They're going to move it up the book and you're going to get a lot of slippage. And that's just the market makers. Their job is not to give you all of their shares or to potentially set themselves up for a loss. They're making the market, but they're also trying to make money. So next thing you know, this thing went in an instant, in less than a minute, it went up $10 a share. So with 20,000 shares, that's a $200,000 loss in an instant. And it stopped there probably because it was after hours, right? But at a different time of day when there were more traders around, I mean, you don't want to underestimate how much these could go up. And so most short sellers recognize that shorting a stock with a float of under a million shares is extremely risky. I mean, it can work, but if it doesn't work, it can fail, in pretty epic proportions. So, and I'll just show you some examples here. So I've got a couple different trays I'll show you from this Excel or this slide deck. So let's see. So this is a day here. The stock I made the most on this day, I'll just go full screen. NDRA, this had 50 million shares and a sub 1 million share float. I made $161,000 on it that was just in one day. Let's see, this one, SQFT, sub 1 million share float, $58,000. That one was a little choppier, but this one, that I already showed you that, NDRA. This one, NIVF, sub 1 million share float again with 40 million shares of volume. So there's demand on these, and there's demand on them because traders know, these are the ones that can do something pretty special. Does it happen all the time? No, it doesn't happen all the time. But when it happens, you want to get a piece of that action. And this is, of course, a day that it was happening. So made some money on, well, actually, I didn't make as much on that one. The stock I made more on was TRAW. It was a 4.5 million share float. But in any case, the big rate of change, very common with low float. So then this one, got a couple here. BTCM, this was tied into cryptocurrency. So there was a good catalyst there, 6 million share float. This one, 1 million share float. And then BBLG, 500,000 share float. Let's see, this one, 600,000 share float. I mean, those are very low levels of supply. And so if you're short and you're suddenly caught on the wrong side, I've seen them go. I mean, I've seen some of these moves that have just been absolutely insane. And going from $22 a share to $32 a share in 1 minute is pretty wild. So this morning it popped up again. And one of the things that I thought was, what if there was someone that was short from Friday and they did not cover, right? What if they're still holding this thing? What would you do? If you were short from 15 or whatever, 12, and you were still holding and you were down this much, but you knew if you tried to cover after hours, you would just get smoked on slippage. So you're saying, I'm going to still hold it. I'm just going to see this thing through and let's see what happens. So there's a couple things you could do. One is hope that the company does a secondary offering and the stock drops. Okay. Hope that some institutional investors exercise those warrants and that causes the stock to drop. Okay, that's fine. Another thing you could do is you could average down. You could add to the short position. But that's actually going to be a problem. And the reason that's going to be a problem is because when we look at the short interest on this and the utilization of the shares that are available, there's 87% of all the shares available to short have already been shorted. So the utilization is 87.48%. The cost to borrow has gone up over 400%. So it's 4 times more expensive to borrow, and there's not a lot of shares left to borrow, which means all of a sudden, if you want to get out, your ability to get out, or sorry, if you want to add more, if you want to average down, your ability to average down is going to be limited. So now you're just stuck holding it at 12. You can't add heavy at 35 and kind of, create extra supply by selling on the open market, selling into strength, and bringing your average up in this case. If the stock was easy to borrow and had very, very, you know, minimal cost to borrow and the utilization was low, then you would expect there would be more short selling. This has a short interest that was last reported at 37%. So all of that, these are all the variables that are sort of part of the structure of the market and the dynamics that can result in stocks making really big moves like this. And this is, look, I mean, for a Black Friday, day after Thanksgiving, this is a pretty solid move. It's obviously shown some volatility right here just after 9. Um, it was actually right at 9 we dropped, 9:01. Um, but I don't see, let's see. So they did put out another headline. Now, one thing that I'll say is that when companies are putting out headlines like every 15 minutes, 9, 9:15, 9:30, sometimes people get a little nervous that like there's almost a little bit of desperation. Like, hey, 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 don't stop looking at our stock. It's still strong. So that almost makes me more suspicious about the risk of potentially these red candles being caused by either, I don't know, either a company doing an offering or maybe institutional traders are selling. I'm not sure which it is, and I could be wrong. It's at the end of the day, it's speculation. We don't know, but we can see the price action. And so right now the price action's not as clean. Now if this ended up curling back up and squeezing back through the highs later in the morning or whatever, then it's game on, back up here over the highs. As soon as you're breaking over the highs, like to me, that's where this gets exciting again. And so I just really try to trade the price action more than anything. And if it's still moving higher and it's clean, then I'm, on board. And if it starts showing this choppiness, or halting down like this, then, I just sort of take my foot off the gas and I leave it alone because there's no sense in over trading the backside of the move. So, so now that's my analysis there on SMX. And, I've already articulated that earlier this morning to members that are, in the chat room and listening to my stream. So now let's talk for a second about this scaling strategy that I'm using. And KTTA with currently 56 million shares of volume, I do see this one. I also recognize this has sort of high levels of volatility here, up and then down and then back up and then back down. So it's swinging around quite a good bit. If we back this one up, though, this is another one on the daily chart that the stock has been beaten up. They've got reverse splits. You've got a history of some bigger red candles. So it's bouncing here. And there's some potential on it, but to me, this price range, I don't often do as well with. I just find that I struggle a bit with it. So part of it is that when they're cheaper, it's harder to get those, 15-cent, 20-cent moves. That would be a 10% underlying move, so that can be more difficult. And they often, the spreads are very tight, which is fine, but they can become very crowded with traders who try to buy like 200,000 or 300,000 shares each, hoping this goes up to $3. And then when it does, they have big sell orders that are on the ask, and it just starts to become, it's too heavy. But in any case, so let's talk a little bit about this scaling strategy. So what I'm going to share with you, I've been trading for a long time, and I funded my first account, by the way, in 2001. So I wasn't day trading at that time. I was trying to be, more like investing in things that either could go up quite a bit over the long term, pay dividends, or potentially could double in, a few weeks, which would be amazing, but nothing like day trading. So, but even with all this experience and all this time in the market, I still am making sort of new discoveries. And so I want to compare my win days to my loss days. And we're going to do this for, let's see, we're going to go from 2020, we're going to do 2024, because this was when I made this epiphany. So it's actually going to be a little bit earlier, but it's okay. So if we look at this, these are my winning days. There were 197 of them. And these were my losing days. There were 23 of them. And what I noticed on my lose, so this epiphany, by the way, came after I had a big loss. I was just feeling frustrated. You know, I had one of those days where I sat down and I was red on my first trade right out of the gates. And then the second trade, I took even bigger size to try to kind of recoup that first loss. And I lost a second time. So now I'm even deeper red. And then the third trade, I was red and hit my max loss. And so I was like so frustrated and so annoyed. And so, usually, when I'm frustrated and I'm annoyed, one of the things that I do is I take a step back and um, I try to get perspective. And usually, initially, I need to walk away from my computer for a little bit and go for a walk and just stop trading, right? But when I come back, one of the first things I like to do is I look at my metrics because my metrics are really helpful at showing me what I'm doing that's working, okay, but also what I'm doing that's not working. And so as I pulled up my metrics, I just happened to run this comparison of winning days and losing days. And it was over the last year or so. And I hadn't thought to do it before and really look seriously at it. But what I noticed was that on my losing days, and of course I was sitting on the losing day, that my accuracy was only 46%. 46%. That's it. And I thought, I've been trading full time for this long. And what good is all of that experience and all that intuition if on these losing days I'm just going to trade not with calm, cool, collected, logical, analytical mindset, but just from pure raw emotion, fear, frustration, anger, stubbornness, and spiral. Because that's what was happening, right? On those red days, what was happening is I would have my first trade, number one, and I would lose money. So I'd be down. And it would immediately trigger really annoyed. And then I don't want to feel annoyed anymore. So what's the best way to make that feeling go away? The best way to make that feeling go away is to make back whatever I just lost. So I'm going to take more trades. But now, especially if the market's slow, in order to take more trades, I'm going to have to reduce my quality standard. And to make that money back faster, I also have to take bigger size. And this is an emotional response. And then what results typically is losing more money. And then I'm even more angry. And then I take even bigger size. And then I lose even more money. Right? So this is a negative feedback loop, a spiral, really, that many traders find themselves in. And all of this, the culprit to all of it, what is it? Is it losing? Not really. It's not the loss. It's the emotional response to the loss right here. So what I realized was my problem. So I thought, well, all right. To back up, I asked myself, I said, okay, is there a way that I could know sooner that today was going to be a red day affirmatively? Because if you told me like last night that today was going to be a red day, I wouldn't show up, right? Okay, well, maybe there's no way to predict that. But how early in the day after I start trading can we predict that it's going to be a red day? And there's sort of a statistical model here where after like 2 or 3 red trades, the likelihood of this becoming a good day is very low, right? So now the probability is just higher that it's going to be red. And now it's just how big is the loss going to be? And so what I realized was that my best days typically started with me sitting down and on my first trade, I'm green. First trade right out of the gates, I'm in the green. And the worst days start with me, of course, going red. And so then I thought, well, what if, for the sake of argument, I just implemented a rule of trading, this is just a test, a rule of trading with 1/4 size until green 1/4 of my goal, daily goal. So trade with small size till I'm green with, about 1/4 of the daily goal. So, and I thought on a really good day, this is going to happen in my first trade. And I guess I asked myself, am I going to feel FOMO and frustration that I took that first trade with only 1/4 size instead of full size? And I reminded myself that on my best days, I don't take just one trade. On my best days, I end up taking dozens of trades sometimes. So as soon as I'm green more than a quarter of my daily goal, then at that point, I'm free to size up. But until I've gotten that first cushion, I stay with small size. So today, for instance, today on my first trade, which was on the stock WAI that popped up on the scanner, which I thought might have been our potential wildcard stock for today. It was a lower float stock, popped up on the scanner, and I was like, okay, I can work with this. I bought 5,000 shares, and then I added another 5,000, and I was looking for the squeeze through the $0.50 whole dollar. It ended up rejecting, and I ended up stopping out of it. Okay, but I never was in full size. So 10,000 shares for me is not a full size position. That's still quarter. Not that this one really supported me going full size when I first took the trade, anyways, because the volume was very light. But nonetheless, my full size is 50,000 shares. Depends on the price range of the stock. I wouldn't do 50,000 shares on SMX, but depends on the price range. So 30, 40,000 though. So anyway, starting with 10,000 shares is small enough. I went red, and then I took a trade on SMX. So then on SMX, would it have been the right thing to take 20,000 shares? The answer is no. Even though, as it turns out, it would have worked, it would not have been the right thing to do, because if it had not worked, then all of a sudden, with 20,000 shares of SMX, I'm down 40 grand potentially. Big loss because it's more expensive. So I ended up taking 1,000 shares and then adding to 2,000 and adding to 3,000. And in my first trade on SMX, I made, I made $2,000. Yeah, it was about $3,000, $3,000. So I was only down about 2,700, 2,800 on the day. So I was like, okay, that's good, but I'm still red. So then on my second trade on it, I continued trading with 3,000 shares. And then eventually I got myself to break even on the day. And when I was break even on the day, part of me thought maybe I should just walk away here. This is sort of damage control at this point. It's Friday, maybe just walk away green. But then I saw another setup that I liked, and I said, okay, I'll keep trading this, but I'm going to continue trading with quarter size. And so today, because the first loss was with 1/4 size, you know what happened? So trade number one, I go red, and I'm not going to say I'm happy about it, but I'm also not irate. So I'm just kind of like, it's a little annoying. Kind of predictable, kind of typical. It's a Friday, day after Thanksgiving, light volume, market's been cold. But I'm not emotionally compromised. And so then when I take trade number two, I'm still focused on A quality setups. I still am working with my analytical, calm, cool, collected state of mind. And so then that trade ends up being a winner. So the first one was a loser, second one was a winner. And then I take trade 3 and trade 4 and trade 5. I ended up taking, a dozen trades today. And so I worked my way slowly through just small base hits up to $10,458 of profit on SMX. And this is a day where, 2 years ago, I could have very easily spiraled. I lose 5,000 on the first trade, and then I go in big size on the second. And look, if it worked and I was up 40 grand on the day, then I feel like a hero. But the reality is, more often than not, when you start the day in the red and then you revenge trade into trade number 2, you're going to lose. And I think in total, over the long term, you're going to lose more than you make with that type of emotional strategy. So even though today it might have worked, more often than not, it will not work. So anyway, and now we could see this coming back up to the highs. So one of the things I had mentioned was that, if it comes back up to the highs, that's the level that, I would find it interesting. So we'll back this up. So anyway, so now what I do is I utilize this scaling strategy where I take quarter size until I'm green, a quarter of the gold. Now, I won't say there haven't been a few days where I've fallen into this trap. I have. It's happened a few times, even since implementing this, where I ignored my rules. I traded with too big a size on the first trade. The loss did trigger me to get emotional. And then I was sort of back to that old bad habit. And I had a couple days where I managed to finish green and a few days that I had big losses. And, so I'm not perfect. And this is actually a really good instance to kind of share with you that I can teach you all the rules of the strategy. And I do for our members at Warrior Trading. You learn the ins and outs of my entire strategy. But I've often said that traders fail for two reasons. The first reason they fail is because they come to the market with no strategy at all. So they're basically shooting from the hip, trying a little of this, a little of that, and they get inconsistent results. They don't have a technique. More or less, they're kind of gambling. Just, I'm going to throw money on this. It's very speculative. And then there's a second group of traders who lose money. They're a little smarter than the first group. They have learned a strategy. They've spent the time, teaching themselves a strategy, testing it, practicing maybe in a simulator, but they still lose money. And why is it? It's because they lack the discipline to consistently follow the rules of the strategy. And I get that because we're only human, and it can be very frustrating when you're sitting here faced with loss. So I've had these times myself where I'm sitting here and I'm like, all right, I'm going to be following the rules here. And the next thing you know, I'm making a big mistake. And it's very disappointing when that happens. So I get that. And being a successful trader is not about being perfect 100% of the time, but it is important to minimize how often you have those setbacks as much as you can. So anyway, that scaling technique has helped me quite a bit because it's allowed me to keep my red days generally a little bit smaller, with the exception of a couple of ones that got away from me. And but at the same time, it hasn't really held back my green days from being really solid green days. And I think that's where that's where I feel really good about this technique. So some techniques might hinder your progress as well. You don't want to cap your upside. You want to cap your downside, but not your upside, right? That's where things get tricky. Now you can see this volatility on SMX. Now it's back to 35 and it's showing a halt level here. So it's obviously highly volatile. I haven't taken any additional trades on it since we started this broadcast. So I'm just sitting tight. I could be persuaded to trade it if it could prove to me that it could hold up in these areas. But each time it, kind of came back up, it rejected, and then came back up right there. And now it's rejected. So, we'll see. But you could also, speculate as to where all of this selling is coming from. It's additional supply perhaps. And your variables are the company selling with a shelf registration through an investment bank, an institutional trader who has shares they're selling or has warrants they're exercising and selling the shares on that, or short sellers. Or you could argue maybe some retail bag holders, but the float's so low and the volume today with 8.5 million shares has more than enough volume to sustain everyone selling who was already in it for profit. So I don't actually think that it's probably inside or existing like bag holders or people that have been holding for a while that are taking profit here. Okay, so let's see. Now, I want to welcome you guys again who are tuning in on YouTube. Today, I wanted to host a special Black Friday broadcast. And my thought was that I would give you some live market commentary here if there was a suitable stock or opportunity to do that. Right now, it's, I suppose not surprisingly, been a little slow. So took the opportunity to give you a recap on my trades from this morning that I've taken thus far, to share with you my scaling strategy. And I had said as we got closer to 10 a.m., top of the hour, I would do some Q&A. So we've got about 8 minutes here to the top of the hour. My routine each day is I sit down at usually about 7 a.m., sometimes a little earlier, sometimes a little later, but usually around 7 a.m. And I begin by looking at our gap scanner. When I sat down this morning, I saw SMX was our leading gapper, but when I first pulled it up, it was around 6:30, and I was like, oh boy. So yes, it made a move early, but sold off right here. So I thought, no, that's not so great. But then it ended up coming back up in this area, and I got a nice trade right down in there, and I got a nice trade in this area when the MACD flipped to positive, and that gave us that move all the way up here to 40. It was about to 39, and then I took profit, and then it squeezed a little higher without me, but that's okay. And you know what? That's also a good lesson on the reminder that you're never going to get the perfect move from the bottom of the set up to the top. You do the best you can. And, you just accept that every day, I suppose you're doing one of two things. You're either giving back profit or leaving some money on the table. And I don't mind leaving a little money on the table as long as I'm walking away feeling like I paid myself and I've got a little bit more profit than I had at the beginning of the day. Anytime I've got a little more profit than the beginning of the day, I feel like I've done a pretty good job. All right, so let's see. And those of you guys in the chat room today, will we'll do the Q&A session on YouTube. So I'll be watching the YouTube chat specifically, but I'll also see if I'll open the mentor room. So if I notice a question in the mentor room, I will try to answer it there as well. So let me open up the mentor room. It'll be the Warrior Pro mentor room. And then I can switch my broadcast for members to that room, so it's less disruptive for those that are still trading. So Warrior members, I'm going to switch my broadcast here, and I'll jump over to the mentor room because I don't anticipate taking any more trades. But like I said, if this ends up surprising us and going back to the highs, then maybe I will. Okay, so while I switch that broadcast for members at Warrior Trading, those of you guys here on YouTube, I appreciate you guys tuning in today. I hope you had a great Thanksgiving. I hope you enjoy the weekend. And I hope to see you guys in the chat room as full-fledged Warrior Pro members on Monday morning. And of course, you have our Black Friday special sales discounts that make it a great opportunity and a great time to join. And just, while I'm sort of on that topic, since we've got about 5 minutes till Q&A starts, as Warrior Pro members, when you guys join using the Black Friday coupon code, we give everyone who joins during this little window a 7-day money-back guarantee when you become a Warrior Pro member. So the nice thing with that is you can join today and become a member, and you can start going through the classes today, this weekend, Monday, Tuesday, Wednesday, next week. And as long as you email us on or before the 7th day, 7-day money back guarantee, we give you a refund. And there's no hoops that you have to jump through. You don't have to do anything crazy. And this is something that many people can attest to because they've done a 7-day money back guarantee, and people will ask, they'll say, hey, does Warrior, is Warrior good about this? They make it hard, and we don't make it hard. And you're not going to get a surprise rebill. We make it very easy for you. Our belief is that we've got a fantastic community here. We've created fantastic tools. We've got a fantastic curriculum. And for those of you guys who are in a place where you're ready to commit to trading and, dive into this, I really believe there's not a better match. But it's possible that you'll come in, you'll be like, oh, I'm not at the right place right now. In which case, no harm, no foul. It's fine. It's no problem to step out of the, to take us up on the 7-day money back guarantee and to step out and come back in a year when it is the right time. So we just feel like if you're not loving it, then, we're not trying to twist your arm. And the reason that we don't have just the chat room available, I really am a big advocate of wanting to emphasize that my chat room is an extension of the classroom. It's where I'm demonstrating the strategies that you're learning. And so if you're in the chat room, but you're not in the classes, that feels inconsistent with my goal of really giving you the opportunity to learn everything that I know about the market. I'm not saying that as a chat room member only, you couldn't potentially learn a lot, because you would learn just by watching me trade. But I worry that if you're joining the chat room because you're like, well, the chat room is only $150 a month, that's cheaper, then you might be someone who doesn't have as much money available to you right now, which could mean that you're going to feel more desperation and more pressure to make money trading ASAP. And those emotions are not going to, they're not going to serve you well. And I'm going to be upfront with you on that. I'm not telling you that you need to be rich to start trading. I certainly wasn't when I got started. But I do think that it's important and helpful that when trading can be thought of as a new skill that I'm learning, that if I can make some money at it, this is awesome, but I don't need to make this money by the end of this month to pay these really important bills. Because if you're in that type of situation, then the truth is you should find a job or a way of making money that is a pretty guaranteed trade of your time for money. So whether that's driving Uber, you put in your time, you get money. Whether it's freelancing, doing work for different people, whether it's having a regular 9 to 5 job, it doesn't really matter. It's up to you to choose which one you want. But I really think that it's better if you're in that state of desperation, because I have found that traders that I think tend to do better are traders who already have they've got enough either sources of income through freelancing, which is often works really well with trading because you can be flexible with your time. Small business owner, or someone who's at a place in their career where they have the time they can spend trading, and so they've got some more resources. So they're in a good you know they're in a good position there to to trade. And I find that oftentimes when people are in that better mental position, it feels like sometimes the people who need the money the least are the ones who make it the most. I mean, you see like some of these, people who have crazy amounts of money, who post on social media, like on Twitter or whatever, oh, just bought like a million shares or whatever of this stock, and then they'll hold it for like 5 days and like make $5 million, and you're like, this is crazy. For them, they've got so much money that it's like a game, and they're not. It's like it's just totally. It's a relationship with money that I don't understand, and I'm not there yet. I don't know if I'll ever be there, to be honest. But it can be frustrating for a beginner because you're like, I'm not. I'm just trying to make a couple bucks here. $200 a day, $400 a day, $500 a day, and why is that so hard? And that is the blessing and the curse of the market. If if you end up, unfortunately, you could literally spend years trying to make 15-20 cents a share per day, and then once you're making it, you can scale. But until you're doing it consistently, you can't scale. And then, of course, if you're in the position of having just a lot of wealth, it's easy to hold your winners and let them run and not get emotional about it because you're just holding it. And on the other hand, when you're in a loser, you could just cut it and you don't really care. You move on to the next one. So how do you put yourself in that headspace that those people are in that seems to give them an advantage, even if you're not actually in that place today? And I think that is done by first practicing in a simulator, building up your track record, building up your metrics, and trading, focusing on the process and recognizing that profits are a byproduct. So right now, your job is to focus on the process. And so for members at Warrior Trading, in Chapter 14, I give you guys a trading plan that you can start following. And we give you access as part of your Warrior Pro membership to a simulator for 90 days. So you can practice that trading plan in the simulator. Prove you can make money with it. Because if you can't make money in the sim, you shouldn't put real money on the line. But if you can in the sim, then all right, give it a try with real money. Okay, so let's do some Q&A here. All right, so let's see. So I'm just going to kind of scroll through here. So how do you stay disciplined in the simulator? When I trade with 20 to 100 shares of real money, I seem like I follow the rules more than in the sim. In the sim, 20 shares, I don't feel like I'm treating it like real money. I get that. And so to me, the simulator serves two roles. The first role is to teach you about basically how trading software works, because most simulators and most trading platforms are quite similar. Once you know how to drive one car, you can pretty much drive them all. It's a generalization, but they're just so similar that once you understand the mechanics of one, you can translate it. So a simulator is great for just building your comfort actually using this software. And then number two, it's to start to build a little bit of a track record. But I do understand, which becomes your proof of concept for trading real money. But I do understand that for some people, they feel like they just don't treat it like real money because it's not real money. And so if you're in that situation and you're using a commission-free broker, trading with 1 share or 2 shares essentially is like trading with a simulator, except it is real money. So if you have the money to sort of set up the account and trade with really small size, you could start doing that with real money. It's just very important that you discipline yourself to stay in negligible share size so you don't end up taking, real losses. So SMX kind of rallying up here. One of the challenges with this, by the way, is that now we have halt levels after the open. So now it's at the halt level of 44.29. And we've seen here that it halts down and then it kind of rallies back up, halts down, rallies back up. So it almost makes me a little worried. Is it going to halt up and then kind of open higher and then sell off and then maybe give us another move? But trading around halt levels can be an added level of complexity that I don't love. So for right now, for me, I don't feel like I could be comfortable buying this up here because if I got in and I timed it wrong, look at that. Look at that candle. That dropped like $5 a share. Losing $5 a share. I mean, that's not so fun. Okay, so let's see. Of the short sellers I've known over the years, what's been the most common cause of them blowing up? So typically what ends up happening with short sellers is I see pretty high levels of consistency where they're growing their account, and then they'll just have that because especially if they're counter trend trading, so they're shorting as something's going higher. They short as it goes higher, and then when it comes down, they cover. Short as it goes higher, and then they come down as it cover. They cover when it comes down. But when you get that one that just keeps going higher and you can't add to it anymore, and then finally it blows up, what ends up happening is they give back sometimes all of the profit they've ever made in one trade, and that can be just like a death blow where they're like, I can't keep going, and my account's gone, and I've got a margin call, and it's really sad because during that period of 90% accuracy, you've built so much confidence, like I know what I'm doing, and then it's all gone, and that's it. It's really hard. Okay, let's see. Thank you for that question. Question about hotkeys. How do you execute them so quickly? What is your mechanism for actioning off the hotkey executions? Do you hold your shift key in anticipation? Do you use two hands? So, great question. The way I do hotkeys, and I'll show you my keyboard here, is shift 1 is buying 1,000 shares, and then 2,000, 3,000, 4,000, etc. And so that's, I hold the shift button, and then all I have to do is tap the 1 when I want to buy. And then for selling, it's control with my pinky. And then I have this hand up here to sell, to add liquidity, to sell in the ask up here. So K or L, depending on half or full size position. And then Control Z is one hand to sell in the bid, to bail out, and that's to sell in the bid. So those are my primary hotkeys. As we've talked about in the advanced hotkey settings chapter of the class, I do have some more sophisticated settings, and I, at this point, do have a lot of different hotkeys on my keyboard, but they're not all keys that I use on a day-to-day basis. And for a beginner trader, it's better to master a couple, like 3 or 4 or 5 hotkeys with stickers on your keyboard, and then add them later, add additional ones later. So SMX currently halted, showing a $45 resumption right now on the resumption quote. So it's bullish. Typically, one of the techniques that I look at is trading dips and rips. I do notice this had some resistance here earlier, and it does feel like we're coming up to that level, but we might gap above it. If we open, we might open just above it. My biggest concern with this stock is the previous history today of these red candles. So given it has a history of doing that, it's very likely it will do that again. It's just when. And can you avoid getting caught in a candle that does that? That's where we get nervous. Okay. So let's see. How much do I rely on level 2 when I'm in a trade? I am looking almost exclusively at level 2 when I'm in a trade. Level 2 is the primary thing that I'm looking at. So it's, I'm really staring right here at level 2. So for this resumption, for instance, the halt time was 10:04 and 27 seconds. So resumption is going to be about 30 seconds. And I don't like I said, I don't really want to break the ice and trade this here because I'm concerned that we keep seeing these extensions and then the sell off. And so, but what I would be doing is I'd be watching this, and sometimes I'd put an order up here at like 26.50, like 100 shares. But what I'm really watching is the ask and the flow here. So we're going to come up to resumption if it's a 5 minute long halt. So watching here, it's $46 resumption. It's still halted. So there it goes. So now what I would watch here, sometimes that dip and then buying for the break of 48 is a setup that I would watch. And then the next halt level is at 50. Now, in this case, I glance at the spread there and I see, ooh, it's a big spread. I also notice a 10,000 share seller at 50, which makes me a little nervous. So all of this creates a bit more risk. Now, I'm watching this one purely from the sidelines right now. I'm not in the trade. But look at how fast it hit 50 and then it's back at 48.88. So I haven't even looked at the candlestick chart since this resumed. I'm only looking at the level 2 right now. Now we're going up to 52. Halt level's 53.68. So this is very bullish. There's no question about it. It's pulled away. And hey, I love seeing that. It's unfortunate that the stock has this history of these red candles because it makes it harder to trust. On the other hand, it might have given shorts additional conviction to take a trade on it, for all I know. And now they're stuck. Because now it's halted up at 53.68 and it's showing a $56 resumption. What if it resumes at 56 and then squeezes up again? Then it's going to halt at 65, 63, right? So all of a sudden, if you're short, it's very hard to unwind this position. Okay. Why use the bid to bail out? Well, I would always prefer to sell on the ask, but if I can't get filled on the ask, then I can flip and hit the bid. So hitting the bid would let me get out a little bit. I could just sell to a buyer who's got shares and wants to buy. One of the things that I'll tell you with stocks like this is, you know, as it turned out, I missed this kind of first move. And if I'd gotten in here and gone red, I would have been annoyed because I missed a better entry down here and then I kind of got in a little too high. So the downside of losing is that not only do I lose money, but I feel like I either trade it the whole time or I don't trade it. Stopping and starting is difficult, which makes it hard if you're teaching a class or doing something like this. Or you walk away from your computer and then you come back. Because it's like if you walked away and came back here, you'd be like, oh my gosh, I want to get in up here. And then you buy it up here and lose. And you're like, I am a moron. I missed this entire run up. And then I buy it at the top and I lose. I'm probably the only person who's, you know, read on this stock today. And so sometimes it's better just to say, you know what? All right, I missed this one. I've got to let it reset entirely. And maybe there'll be another opportunity. And you know what? If I miss it, hey, here's the good news. There's always another one around the corner, right? I mean, I showed you my screenshots there of some of these big P&Ls, but I mean, there's, you know, dozens of days where it's like, you know, 90 grand, 98,000, 100 grand, 116, 127. You know, the best days for me, it comes together pretty quickly. And most of these days, for what it's worth, I'm trading pre-market and I don't have to deal with circuit breaker halts. The halts create an added level of complexity, which I don't love. So the best moves for me usually are actually pre-market, where we could go from 40 to 53 and we wouldn't have halted right there. We wouldn't have halted at 44. We would have just kept going. So you get in the zone and you're just still buying dips and selling rips and buying dips and selling rips. And next thing you know, you've got something that goes up, you know, $30, $40 a share in 15 minutes. We've literally had that happen. Those P&Ls I'm showing you was just showing you a lot of those are from, you know, a move where it just kept going higher. So, you know, we pull up this chart. So this one, let's see. Oh, I'm already on it. So this one went from 8 up to 19. That was pretty nice. This one, what was the price range on this one? This one went from $30 to 56. So very similar price range here on this one. I will also say these higher price stocks can be riskier because of the, unfortunately, because of the spreads. So you can mismanage it, and next thing you know, you could be down $5 a share. This is halting up, and most likely it will halt down again. So Remember, they halt up, but then they can halt back down. So the halt on this one was 10:10 in 24 seconds. So resumption will be 10:15 in 24 seconds. So you've got about 90 seconds to resumption. And this can be the thing in a cold market where shorts start to get a little bit more desperate. So they start shorting higher risk stocks just because they're moving. And then if they get squeezed, it can make the squeeze that much more volatile because so many people are in it short. Okay, let's see. What do I consider a dip? So when the MACD is still open and we're on the front side of the move and we drop down, I do like trading dips around $0.50 and whole dollars for the pop back up. But on the other hand, when you have something that's this expensive, that's this extended, you want to be careful buying dips because it could flash and end up flush going into a halt down if someone all of a sudden dumps a really big position. And again, that could be an insight. That could be the company selling 1 million shares on the open market to raise money. So we've got about 15 seconds to resumption on this one now. Okay, so we've got about 7 seconds to resumption. So we're showing, oh, so we resumed a little early there. I think it felt early. But oh no, I'm sorry. I was thinking about 24. Anyways, nonetheless. So this is a spot where typically I'm going to be hands off. I would think of that as a dip and I would have been a buyer right there. I'm having to pull my hands off because I don't want to make a mistake and impulsively press that buy button here and end up deeply regretting it. Now, there is some sell orders going through there going into the halt. It did halt, and now it's showing a $75 resumption. So for what it's worth, you guys had every opportunity to trade this. This one, I'm sitting on the sidelines, but you had every opportunity to take this trade. All of our members at Warrior Trading, when I'm giving my commentary, have every opportunity to take these trades before me if they want. At the same time as me, if they want to buy after me, it doesn't matter. I'm putting it all out there. I'm telling you exactly what I'm looking at. So this is where, okay, you've got 3 halts in a row. We're pretty extended. So this is a Black Friday wild card stock. It's impressive. So in trading pre-market, if the stock moves in the wrong direction below your position, how do you handle it? So during pre-market, we don't have stop orders, right? So I can't just set a stop and get up and let it work. And if it stops me out, stops me out. I unfortunately, I'll have to sell, and I usually would end up selling on the bid. Now, if I don't get filled, I'm gonna have to cancel my order and sell a little bit lower because there's no marketable orders either. So I just have to sell with an offset below the bid. So the order that I use, and I'll show it to you here, I go into my custom orders. So let's see. So we're going to do sell half, and I'm going to do sell bid full. So this is NASDAQ, 10 cents below the bid right here, full position. So it's going to sell my full position 10 cents below the bid. Now in this case, 61, it would be 60 and 90 cents. So 10 cents below. So it'll just always be 10 cents below the bid. But if you have something like this that does have kind of a big spread and is jumping around, that can be tricky. So, today's a day where at this point, I'm actually not even above 1/4 of my daily goal. So my daily goal is 20,000. So, and 29,000 has been the average this year. So I'm only, 4,500, 5,000 is sort of 5,000 is the line that I would need to cross to take bigger size. I made the conservative choice today not to push it. And not to sort of be aggressive on taking this dip right here. And it's 100% because of this history right here of that red candle into the halt down, that one right there, and this one right here. So I would kind of argue whatever caused those 2 drops right now, obviously whether it's a short seller, a institutional trader, or the company selling shares, that seller is not here right now. That seller is letting this go higher. They probably have the shares they could sell. They're letting it go higher. Now, by letting it go higher, that's going to bring in more volume because now people are like, holy smokes, this thing's up 250%. More volume means they will actually be able to sell and at a much higher price. So I really believe a lot of these stocks, how much they go up is a factor of, on the inside what the companies are kind of thinking. Because a lot of these stocks, as soon as they pop up just a little bit, they're selling shares, and it's like the company doesn't let them go up because they just start selling. And then sometimes we see this where we're like, whoa, they're not selling. Even GameStop. Think about GameStop. When Roaring Kitty came back, what did GameStop start doing? They started selling 45 million shares into the volume. There was high volume, so they were like, we're going to sell. And they basically just dumped all of that stock on the open market to all of the retail traders. And they took all that money and they put it on their balance sheet, billions of dollars on their balance sheet. And so a lot of companies, so that they single-handedly prevented the stock from going higher. They killed the momentum and they raised money. And you could argue they had a duty to shareholders. And so that was, raising money was the right decision, but they didn't let the stock go higher. And then on the other hand, if the stock starts dropping too much, some of these companies will announce that they're going to exercise or they're going to initiate a share buyback. So now they're not going to let the stock go too low again. And of course, they have the money to buy it back because they did the offering. Okay, so this is going to resume here and showing currently a gap down, which gives us the risk that it'll open and halt down instantly. Now, if it doesn't, that's very bullish, but I would be super cautious here. So that's your first halt down. Now, the only scenario where I would ever trade that is if it thins out and then rips back up. It could thin back out by shorts covering because you would need buying to go through. Right now, you've got basically a cross market in that moment. So 3 halts up, 1 halt down, predictable. Total liquidity on this, total volume, actually only about 150,000 shares on that resumption. So, it's not, there's not a lot of volume. I mean, it's got 10 million shares of volume, but it's halting very quickly. So for Warrior Pro members, I am live streaming every morning. Every morning I'm live. So starting around 7 a.m. and I usually end my stream around 10 a.m. So today I'm streaming a little bit longer. So why is the time and sales red when it's halting up and green when it's halting down? So that's a good question. So when a stock is halting up, when it's halting up, you cannot have anyone buying above that price because it's already at the top of the band. So the only orders that can go through are red orders of people selling. When something is halting down, it's at the bid at the bottom there, so no one can sell. So the only orders are people buying, but they are buying from that that seller that's basically holding it back. So I would actually think that the orders should be entirely green, but as it goes into that level. But in any case, doesn't appear to be the case here. Okay, so let's see. Let me look for the next question. Okay, so Ross, in the scanners, can you explain what's the first thing that you're looking at when you first pull up your scanners? So when a stock first hits my scanner, like this one, VEE, I don't even need to pull up the chart. Initially, if I'm on my phone, I just look at the scanner data here and I look at the symbol. Do I recognize it? The price, the volume, the float, and the relative volume, and then the percentage change. So it's only up 23%. It's got low relative volume. So in terms of my 5 pillars of stock selection, it doesn't meet it. So I don't even bother to pull up the chart. I don't need to. On the other hand, we have something like, SMX. This one, relative volume is 22. It's up 92%, right? So then this is something where I'm paying a little bit more attention. 10 million shares of volume. I see that it's got a news flame. So then I click on it and I pull up the chart. So when I'm sitting down and looking at my scanners pre-market, this scan right here, I actually don't I don't pull up the charts initially. I'm just looking at the details of the scan alert and then deciding how many of these are even worth looking at the chart on. 58 cents, no. 75 cents, no. Float too high, float too high. So now we can kind of narrow it down to this one and this one right here. And so then at that point, I pull up the charts. No, Warrior Trading's not going to do any prop firm stuff. We're not a broker. We're not a prop firm. We can't trade money. I don't trade money on behalf of customers or anything like that. We're a software company. We've got all of the software that we sell, the subscription-based software that we're building out for all these years, and then we're a provider of education. So we've got educational content that walks you through how to use the software and walks you through my strategy. Okay. So let me look at this resumption quote here. So halted down at 54. The halt time was 21. So resumption will be 26 and 17 seconds. So we've got about less than a minute to resumption. Thank you guys. Appreciate you tuning in and having watched those other videos. That's great. Okay, so just sitting tight right now. We've got about 17 seconds to resumption, showing 51.25. So after the first halt down, if this is bullish, there might be some shorts who cover, maybe. There might be some traders who try to buy the dip. But the 9 moving average is at 50 right now. So it's a little bit further down. So sometimes I watch to see if it bounces back up. First candle to make a new high, potentially, but that does have the risk of a false breakout. The first halt down showing looks like a 10-minute halt. In fact, that's not totally uncommon because right now you've got more people who are trying to sell it and there's not enough buyers. And so the market makers, they're having a hard time matching the order for the resumption. And so it is still halted. So showing 51.25. So now it's going to be a 10-minute long halt. So I can see the resumption prices also using Webull. You have to subscribe, go in here and subscribe to NBBO data, NBBO details right there. And then you'll be able to see the resumption prices. You can see the halt levels, limit up, limit down right here. And then you can see the resumption quotes. SMX. So currently showing 51.24. So not all brokers offer that, but a lot of them do. Let's see. What differences do I notice between Webull level 2 and Lightspeed? The only difference really is the color scheme. That here I've able to change the colors to my liking, and I can go into the settings and I can really change them under design to be whatever colors I want. I could change them however you want, and you can't do that at Webull. So they give you a couple options for appearance: red and green, multicolor, or blue. That's it. 3 options. So your ability to customize it is limited, but you know that. Other than that, it's okay. So you know, and in hindsight today, should I have taken any trades in the small account? I think, in hindsight, keeping in mind risk, I did the right thing by not taking any trades today. Trading SMX, that would have been a Hail Mary pass. That would have been extremely risky. Not worth the risk. I mean, yeah, it went from $36 to $60. So would it have worked? Sure. But it wouldn't have been a good move. So that was way too risky. And then There hasn't been anything else I feel like I missed out on. Okay, so now we're coming up about 10:30. So coming towards the bottom of the hour here, 10:30. So looking at the quote on this, let's see, we're still showing about 51.10. So the resumption quote hasn't changed all that much. So, do I have a recommendation for catching one's emotions early before you kind of go on to this spiral? I think one of the things that can be helpful is journaling while you're trading. So, just having a pad of paper and just being like, trade one, green or red, profit loss, uh, and and then just having a note of like, how you're feeling. I mean, because the thing is, when you start looking back at this pattern of like, oh, trade one, lost, annoyed, trade two, lost more, super annoyed, trade three, got smoked, furious, trade four, I'm about to throw my laptop out the window, trade five, I've thrown my laptop out the window. That's when you look back and you think, maybe right around trade two, when I'm saying annoyed, frustrated, that was my cue that I should have walked away. Um, so I did that personally. I started journaling like that so I could just kind of get a better grasp in real time of like sort of tracking my emotions. I mean, this is the thing, like it's hard because we don't have I feel like a lot of us don't have the capacity to in real time be very in touch with, are we in our calm, cool, collected, analytical mind, or are we switching to our emotional, impulsive side? And the more you trade, the better you'll get at recognizing these sort of caution flags that are going up and walking away before, you give in to them. So let's see if this resumes here at the 10-minute mark. So there's the resumption, and there's some buyers at 50 right now. It dips down a little bit. So those buyers got cleared out. Halt down 46, halt up 56. But we didn't halt down instantly. So that by itself is, moderately bullish, but we're closer to the halt down than the halt up. If it can break over 52.50, I think that would probably be a good line in the sand, just psychologically. This is probably like one of these setups that people would trade, is like buying a dip. But you can see the spreads have gotten big. The liquidity has gotten kind of worse. Getting in and out with big size, even small size really for a dip, would probably not be super easy. I don't know what your fills would be like with a commission-free broker on this, but now you've got that candle which closed with a bottoming tail. Bottoming tails are typically bullish. Again, though, it's a $50 a share stock, and the volume is declining. So I feel like in this spot, the risk, outweighs the reward. There could be a point where we consolidate for longer, and we sort of go sideways and kind of pop up a little, pull back, pop up, and we kind of identify a wedge in this area for like a curl back up. But usually when we start getting into this price range, I feel like they're YOLO trades. They either work really well or they fail miserably. It's hard to have a lot of in between when you buy something that has a 50-cent, 90-cent, or dollar plus spread. It's just really hard to manage risk. That's the reality. And there's another, see, again, look at these headlines. This is where I really, guys, am nervous. There's another headline there at 10, another one at 10:30. These are, to me, like kind of caution flags that they're continuing to sort of like pepper out these, sprinkle these little headlines out. Like they're just trying to add like little bits of fuel to the fire. I just don't love. That makes me nervous because that makes me feel, and I could be wrong, but it makes me feel like the company's watching the price action and is sort of being systematic about, here's the price action. We need to keep people aware of the stock. So Maybe I'm wrong. I don't know, but that's just how it feels when I see that, and I don't like feeling that way. So I think at the end of the day, I'm up 10,000 bucks on this stock today. I feel pretty good about that. I think I left some money on the table, but as always, if I start thinking just about how much money I left on the table, oh, I could have bought 10,000 shares and made $100,000 on this, while I was doing a Q&A session. Um, I'm going to no longer be grateful for what I've got. And it's really important to be grateful for what you have. And, for me, I am. I'm very grateful for the day. I'm grateful to be green. Any day that I walk away with a little bit more than I had at the beginning of the morning is fantastic. Obviously, I'm a little disappointed the small account didn't get any trades today, but I'm also really grateful for you guys who have helped me with this fundraising challenge. So, $177,000 that we've raised so far, donated 175,000 of it in total, and just yesterday donated another 30,000. Wounded Warrior, Hole in the Wall Gang Camp, Wings for Life, Ronald McDonald House, America's Vet Dogs, and the Genesis Foundation. So I'm feeling pretty good here. I'm feeling really thankful, and I'm appreciate you guys who have tuned in here. We're coming up just past the bottom of the hour, so I think I'll end the session here and be back at it, obviously, bright and early on Monday morning at 7 a.m. So I hope to see a lot of you guys that have been tuning in on YouTube in the chat room Monday morning. If you found today interesting, I think you're going to be really pleased with what it's like to be a member. So you're welcome to come on over. Use the coupon codes for Black Friday. When you become a Warrior Pro member, you'll have a 7-day money-back guarantee. So you've got the next week to give it a try, see what it's like. And if it's not a good fit, no harm, no foul. And if it is a good fit, then you joined with the Black Friday sale at a great time of year to study and, to be part of the community. Learning how to trade is, in my opinion, very similar to learning a new language. And you're already picking up, little bits of the language when I talk about the bid and the ask and the spread. And, we talk about the float and secondary offerings and warrants and all this stuff. But the more you immerse yourself in a community of people speaking the language every single day, the faster you'll learn it. So thank you guys, as always, for tuning in. And reminder, as always, I'm upfront about this. Trading is risky. My results aren't typical. There's no guarantee you'll find success, whether you trade with me or you learn on your own. So please manage your risk, take it slow, and I'll see you guys back here bright and early on Monday morning.